Hello investors, welcome to Simpli Stocks. The result season is currently in full swing. So today we are back with the second video of our December quarter, that is Q3FY26 Results series, where I will discuss 4 good small cap businesses from my portfolio that have delivered very strong results. In our previous video, I discussed top performers from the FMCG and jewelry sectors. Today, we will be looking at businesses from the hospital, retail and gold lending segments. Personally, I am quite excited about today's video because out of the 4 businesses that we will cover, 3 are among the largest holdings in my own portfolio. So without wasting any time, let us quickly get started. The first business we will cover is Yatharth Hospital. The December quarter, that is Q3, has been a breakout quarter for Yatharth. As you can see here, this business was growing in the range of 20 to 30% for quite some time. But this time, during the October to December period, sales grew by a massive 46% compared to the last year. Over the past 2 years, the company has been opening new hospitals and also acquiring existing ones. Now we are clearly seeing the execution of those plans playing out in front of us in numbers. Yatharth now operates total 8 hospitals across Delhi NCR, Agra and Jhansi Orchha, and they have a capacity of over 2,500 beds. Out of these 8 hospitals, the 3 are located in Noida, Greater Noida and Noida Extension. These are mature hospitals. The remaining 5 are new hospitals that are now driving a strong growth. Among these 5, the Agra facility was acquired recently as of February. This facility is now part of the company. So its sales will also start reflecting from the March quarter. So we should see even stronger sales growth in the March quarter results. Overall, Yatharth has been one of the fastest growing players in the hospital sector. Hospitals and hotels are asset heavy businesses and growing quickly in this sector is not easy. It takes time to build a hospital and then make it profitable. However, the execution of Yatharth's management has been very solid. In just the last 1 year, the company has added more than, I think, 950 new beds. With the addition of new hospitals, Yatharth has also become more diversified. 4 years ago, you will notice that its entire revenue used to come from just 3 hospitals in Noida, Noida Extension and Greater Noida. Now concentration risk has reduced significantly. As a result, over time, the market will also start giving Yatharth a premium valuation or a premium PE, similar to other hospital businesses, as its fundamentals continue to improve rapidly. Now let us look at the results in more detail. So as discussed, sales grew sharply by 46% in Q3. However, since 950 new beds were added almost at once, so operating costs increased sharply. This led to margin compression and depreciation also went up. The EBITDA margin, which was earlier around 25%, declined to 23%. So because of all this, net profit growth was at 41%, slightly lower than the sales growth. But see, this margin compression is only short term and is common across hospital companies. As patient footfall increases in new facilities and occupancy improves, margins automatically start improving. When that happens, bottom line growth will also look much stronger. So Yatharth is a good business that you should study independently once. It is the fastest growing player in the hospital sector, and after the recent correction, valuations have become very attractive here. Hospital companies typically trade at premium valuations because they are asset heavy and defensive businesses. However, Yatharth is currently available at around 37, 35 to 40 times earnings. On top of that, this is a business that can continue growing at 35% rate over a medium to long term period easily. Now, just before moving forward, a humble request: if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Coming back to our discussion, the second business we will study is V2 Retail. V2 operates in the value fashion retail segment. It runs clothing and apparel stores mainly in Tier 2 and Tier 3 cities of India, competing against players like V-Mart and Bazaar Style. V2 is the fastest growing company in its segment and has executed extremely well over the last 2 to 3 years. Often when companies become large in size, their growth rate slows down, but V2 has consistently grown at 50 to 60% rate. Last year, the company opened around 73 new stores. This year, it has a target of opening 130 new stores, out of which 106 have already been opened so far in this April to December period. The total store count now stands at around 294, and the company plans to open 150 more stores next year. With such aggressive expansion, the top line will also continue to grow at a fast pace, and to fund this expansion, the company also raised around 400 CR recently. You will see the company also delivered strong performance in Q3. Volume growth was impressive at 48%. This performance is particularly strong because last year in Q3, the base was high because of Durga Puja, as Durga Puja fell in that quarter. And despite this high base, V2 delivered strong growth this year. Normalized SSG, or same store sales growth, stood at 12.8%. One metric that attracted attention in V2's results was this sales per square foot metric. This number declined from approx 1200 to 1000 rupees for this year. That is not something to worry about, because see, similar to what we discussed in Yatharth's case, as new hospitals take time to ramp up, new retail stores also take time to reach their full sales potential. Since V2 has expanded very rapidly in the last recent quarters, this metric has come down. But this is not something you have to worry about. V2's main presence is in Uttar Pradesh, Bihar and Odisha, and is now expanding rapidly across the country. In a recent interview, management has mentioned that while the company currently has around 300 stores, they plan to reach 2000 store count by 2030. So V2 is gradually transitioning from a regional player to a pan-India retailer. Now let us look at their numbers. So you will see that sales in Q3 grew by 57% year on year, and profits nearly doubled to 102 crore rupees. On a 9-month basis, top line growth stood at 64%, while bottom line growth was strong at 119%. Operating leverage is clearly playing out. EBITDA margin expanded by 90 basis points and PAT margin improved by 1.6%, reaching to 6.3%. So these are very strong numbers. Yes, V2 may appear expensive to you at around 55 PE, but retail businesses usually trade at premium valuations only. Companies like Vishal Megamart and Bazaar Style also trade at high multiples. On top of that, V2 is delivering 50 to 60% top line growth, and with guidance of opening 150 stores next year, this growth should also continue next year as well. So you can definitely look into it once. After V2 and Yatharth, we will now discuss two businesses from the gold lending space. The gold lending sector works in such a way that customers keep gold as security or collateral with a bank or NBFC and take a loan against it. And we have discussed this multiple times on our channel and in the Simpli Stocks community too, that the rally in gold prices has led to a strong growth across the gold lending segment. As gold prices rise, customers can take a higher amount of loan for the same quantity of gold. On a year-on-year basis, what has happened is the gold loan books of banks and NBFCs have nearly doubled. In fact, the entire segment has almost doubled. So in the gold lending space, we have been tracking three businesses: CSB Bank, Fedfina Financial and Capri Global Capital. CSB Bank's business update looked good, but when results came out, we got to know that while income grew well, NPAs have increased slightly. Until this issue is resolved, CSB has become slightly risky for new investors. Now let us quickly look at Fedfina Financial in that case, which is also known as Fedfina. After that, we will look at Capri Global. So Fedfina is a subsidiary of Federal Bank. It offers two types of loans: mortgage loans and gold loans. In mortgage loans, customers pledge property, while in gold loans, they pledge gold. The business is largely focused towards MSMEs, meaning small business owners who take loans by pledging land, property or gold. You will see Fedfina now has almost 730 branches across India, out of which approx 594 are for gold loans and around 199 are for property loans. Geographically, the company has a strong presence in southern and western India. Looking at the results, we can say gold loan disbursements grew by massive 128% year on year. Gold loan AUM grew by 52%, while mortgage AUM grew by 20%. So this clearly shows us how fast this business is growing. Consolidated AUM growth may look modest to you, but see, the company has scaled down its unsecured business loan segment. That is why total growth appears lower. But your focus here should be on the gold loan segment. Net interest income grew by 16.8% and net profit jumped sharply by almost 370%. Last year, credit costs were high due to NPAs in the unsecured loan segment, so base is lower. Now, most of those issues are behind the company. For current quarter, there has been some movement in NPAs, but that is not something to worry about too much right now. As gold loan segment continues to grow, Fedfina's net interest margins are expected to improve further in the future. Management has also mentioned that apart from the price-driven growth due to the gold rally, they plan to grow gold loan tonnage by 10 to 12% every year, which is also a strong point. Now, this video is getting a bit long, so let us quickly look at Capri Global as well. Capri's AUM grew by massive 47% year on year. While it is not mentioned here, its gold loan AUM grew by nearly 80%. Net interest income increased by 48% and net profit growth grew by 99%, meaning profits almost doubled. Capri's asset quality has also improved and operating leverage has also played out very well here, leading to a better cost to income ratio, and return ratios have also improved significantly. You will see Capri has expanded its branch network the fastest. Its branches grew by 25% year on year to almost 1330 branches across India. In comparison, Fedfina's branch network grew by around 5% only. Out of Capri's 1330 branches, approx 900 focus on gold loans, while the remaining 420 approx cater to MSMEs, housing, construction finance, and auto loans. Now, that is why you will see that their gold loan business has grown very fast. Gold loans now contribute around 42% of the entire AUM. So, both Capri Global and Fedfina are growing rapidly. You can independently study either one or even both of them. Both are growing at 40 to 50% rate, and management of both companies has guided that AUM per branch will also continue to grow in the future. So this 2026 can be a very strong year for gold lenders. That is why you should not take this segment casually. Now tell us in the comments which businesses would you like us to cover in the next video of our Q3FY26 results series. And if you did not like the video earlier, please do it now. Your likes and subscribes motivate us to keep bringing such videos for you every week. So I will see you in the next video. Happy investing.